The presentation as well, Shubham. So very good evening, everyone. We are here to talk about IFM Alumni Group Health Insurance, on which we started work a couple of months ago. In fact, the idea of the project began, one evening I was exchanging messages on a couple of BOG topics with our president, Sandeep, and the topic of insurance came up. And, instead of having long messages, I hit the call button and I spoke to him. And this is a topic I had not thought of or looked at before. So I asked him, this has been raised a few times. Why are we not doing it, or why is it not happening? And at that point, he explained a conundrum that group policies face. And the conundrum is, you have a corporate policy, the corporate will take care of everything. Things will be resolved. The HR is involved. In an individual's policy, you know what you're doing. You're managing your premiums. You're managing the policy. In a voluntary group policy, how do we manage things? How do we run a policy together as a large group, which is not really, there's no central control. So, and at that point, and I did request Sandeep if I can be added to the group where this discussion was being held. And the next morning when I woke up, he had added me and he had said, Shikha is going to lead. So, to save myself, I actually thought I'll drag some more people into this. And I request, on that group, I posted a message, a pretty elaborate message saying there's going to be a lot of work, but if you want to join this project and lead with commitment for the benefit of this community, please raise your hands. And there were some very brave souls who did raise their hands. May I request members of the team to come up on the video? If you can show your faces and say hello. Shubham, Manmeet, Dibyendu.
Hi everyone.
Ravi.
Hi everyone.
Hello.
Good evening.
Ravi's camera share, guys. It's early in the morning in US. Bad hair day, but you all know.
Hello.
Good evening.
So all of these people, some of these people raised their hands, some were not given much of a choice and were brought in. So, I'd like to thank this team for coming forward to do this. Since then, for the last couple of months, we've been working on this. We have spoken to multiple external parties. We've spoken to other alumni associations to get us started on this project, and a result of that was the survey that you are seeing currently. So we have some slides, very IFM style. We have been going last minute to prepare these. It has been a bit of a mad race here, but we've brought together our thoughts in a few slides, and we're going to talk through those. So if we can go forward to the second slide here. So why an insurance program matters today? What has happened? There have been various instances where, our community members from this alumni body have faced issues. We have rallied together as an alumni body to support. We have stood together. We have had multiple fundraising instances. We've raised, about 21 lakhs for 5 incidents in the last 3 years alone. And each one of them had its own peculiarity, but, the point is that we have stood together. So, but an emergency support fund that we have been using, you're aware that Alumni Association has a fund which has been used in some of these instances. And fundraisers, they are not a systematic solution. If we go for, and by the way, I would like to mention here, I was exchanging messages with one of the recipients of the fundraiser, and he mentioned how it helped him overcome that situation. He was going through a transplant situation, and it helped him. And, that really, makes you feel this community has a lot of solidarity. We are together. But why don't we make it more systematic in terms of a solution? So if you can go to the next slide, Shubham. So in terms of, we've been putting our heart and, coming together, as I mentioned, in these unfortunate incidents. But, a policy basically turns the heart into a structure. What it does is it provides a safety net, for emergencies, especially for the younger alumni where the coverage may not be that high, where people are between jobs. They don't have the corporate coverage at that point. It would make a difference there. It can provide wider coverage. It can bring in more family members, as well as for the alum as well. The alumni members as well. We can have additional coverage relative to what we already have. When you're in a group policy, the premiums tend to be lower than what you would get as an individual. So you get better value and more coverage. Financial independence, obviously, if you are relaxed about, whether you're able to meet your expenses in an emergency, it does help. It does bring you closer to the alumni community, to each other. I mean, in the last 1 week, I have seen so many people rally behind this cause. It has been incredible. I mean, it's overwhelming, and you feel so emotional about being part of this community when you see this. And it is a chance for many of us to give back to a place where life probably started for us, where, we are where we are because we started there. So all of this makes it sensible to start considering a proper systematic solution with a group health insurance policy. Shubha, please go forward. And it's not just us, we're not reinventing the wheel here. Many other all the premium institutions in India, many other institutions have these policies in place already. All the IITs, or a number of IITs, number of IIMs, XLRI Jamshedpur, IRMA, all of them have a group insurance policy solution because, they are concerned about their tribe, they're concerned about fellow community members, and they have put these systematic solutions in place to make it work for them. They're obviously evolving with time. Some of those are 4 or 5 years old, and they're learning in process. We have learned from some of them as well, those we have spoken to. But it just shows that they care about their alumni body, and they're willing to put in the effort and the willingness to come together for a solution. Please go forward. So the affinity group policy, a voluntary group health insurance, it comes with certain issues and certain, foundational things that we need to think about. I was talking about the conundrum that Sandeep explained to me in the call when we first started. This is a voluntary group policy. We will always face this conundrum because, we are coming together. It is not directed by a corporate. It is not an individual running this policy. We are going to run this as a group. We are going to come together as a group to run this. So there will always be this conundrum, how to manage it, how to keep it balanced. There are risks. In voluntary participation, there's a very common risk that the insurers or the brokers talk to us about. It's anti-selection. People who need to make a claim will join first. People who don't need it will not join. So there are other issues. I mean, when I talk to some of the other alumni associations and the brokers, one of the biggest concerns for insurance is fraud billings. So there are risks that can happen, but together we build an ethos within this community to make sure that we will allow this to sustain. We will run this together, and we will act in a manner that is responsible to keep it going for the longer term, to keep it sustainable. We will swim and sink together. Otherwise, this will not sustain. And I will go into a bit more of that, but let's go forward. So the brave souls I was talking about, there are, the way we are conceiving this solution in terms of our governance structure. There'll be an executive section of the Insurance Council. The executive section comprises those who are working on it, who are developing a certain level of expertise, who are very, who are passionate about the topic, and they also come from the insurance background, some of them, so we benefit from their experiences. And that's more like a bit more of a permanent kind of a team. Unless they want to move out, I will ask them to find their own replacement. We will not let them go easily. And then there is the board of governors, which is kind of an elected body, and legal directors or members of the IFM Alumni Association. They have the signing authority. So we have representation from BOG on the council as well. And the Alumni Association president will act as the chairperson of the Insurance Council as well. We obviously always continue to get support from Amrita as well as the manager of the IFM Alumni Association. But I would like to really thank the executive members here who have been putting their heart and soul for the last 2 months. Every weekend we have been spending hours talking about this, talking to external parties about this. So thank you, Manmeet, Vishwanath, Shubham, Dibyendu, and Ravi for being there. Also, Kalol, Vaibhav, Sandeep, all of them are here supporting. So thank you everyone for doing this. If we can go forward. I was talking about the structure. This is again, a schematic representation of how we are thinking about running this. The Board of Governors will remain the signing authority on the master policy, and the council will take on the role of, let's say, negotiating the policy. They will get involved if issues come in. They will bring your voice to the structure, to the design of the solution. There's a broker involved, of course. We will be using the brokers to get the best possible quotes and terms from the insurers. There'll be a tech provider because it's about collecting the money, collecting the premiums and keeping it operationally smooth. So other alumni associations are using tech providers, and we will do that as well. And of course, there's an insurer who we will select, based on what the quotes that we receive. We can go forward. As I mentioned, the role of the council I've already described, but the council will also, given the expertise they're developing, they will support in risk management, and they will provide formal recommendation to the BOG every year to go forward with the policy, with the terms that are in that policy. And on the right, what you see is this is a schematic related to how you, as an individual, if you're signing up for the policy, who will you interact with? There's a TPA who helps you in making those claims at the point when you need it, and there's an insurer behind that TPA, who's supposed to respond to those claims that are made. We can go forward. I would like to call out a very, let's say, enthusiastic and extremely helpful set of people within the alumni body. We're calling them the batch champions. If you've had people in your batch prodding you, nudging you, screaming at you to fill up the survey form, it's them. So grateful for the energy they are putting in. Without them, we could not have imagined to reach the numbers in the survey that we are seeing today. We are getting close to 1,000 mark. I do hope we will go a few more 100 there, because our younger batches post 2009 are yet to come up in large numbers in the survey. And I think that is the set of people, we would like them to come in and, contribute their voice to the design of this solution, and also participate in this policy to make it a success. The larger numbers are coming after 2009. So please do participate if you can. What the batch champions have been doing, they're really, bringing that call to action. And of course, very importantly, they are responding to Ravi's threats, which I think have been very, very effective so far. I mean, Ravi's own class, 93 and as well as 97, have met 100% response rates. So congratulations. We are all, for the example that you're setting, and I hope the other batches can follow and get higher percentage responses as well. Thank you so much, Ravi and the batch champions for that. And lastly, before I hand over to Vishwanath to speak on the technical aspects of the solution, I would just say we've been talking to other alumni associations, and we've learned a number of things, how to keep this going, how to keep it sustainable, and the balance that we need to bring in the design to keep it sustainable. The first time when I had spoken to one of these associations, and when we heard from what we heard from them, fundamentally, we would like all of you to participate in this policy, because the larger the number, the more effective we become as a group, the more we can provide support to members of the community. But this is not your primary policy. This is going to be your last option policy. Your primary policies would be your corporate policies, which you can use, your individual existing policies, which you can use. This is going to be the last policy that you will use. It will provide you additional cover. It is coming with an additional cover. But to keep this group going, we will see this as the last policy we will claim. If we don't do that, if we don't bring that ethos in running this program, there is a danger of it becoming unsustainable, the policy starting to bleed. If I can give you an example, what we heard from one of the brokers, one of the IITs, in the very first year, they had 300% of claims. That will just burn the policy completely. So we have to be very conscious when we are making a claim. We absolutely have to make the claim when we need it. It is there, the policy is there for that. But we do it when we have used other options, when this is what will make a difference to use. And with that, I'd like to hand over to Vishwanath. Thank you.
Shikha, I think it's my, so I'll take it from here, and then later on I'll hand it over to, Right. So as highlighted by her, I think we have, the batch span and how we, the champions really have taken this up, right? Yeah, obviously the threat levels and the flyers and the use of AI, people are getting with all guns and arsenal. And we see the first batch was 1993. Congratulations to them to reach the 100%, and then 1997. But yeah, obviously we have some other batches that need to, keep up with the rest of us. But I think slowly we will reach there, since in last, coming week. So majority of the responses we have already gathered, right? And we are somewhat around 1,000 as of now, right? Now, so let's see that what exactly have people responded, and how does that support the idea. So we have not much, explored too much into the data, but the significance that we see, age-wise categories, and the already existing alumni, the insurance that people have. The first table that we have on the left top. So the all red ones are the ones that are quite at a risk. So as per the experts that we have at our council, at least one individual should have minimum of 5 lakh, an individual. If there are 2 individuals, which means the self and the spouse, it should be at least 10 lakh rupees. So when we see the category wise, especially the age wise, there is a quite significant, around 38% of our all alumni, those who have responded, are under the risk, which means they are somewhat less than 5%. They are somewhat have a coverage of less than 5 lakh, or no coverage at all, which is almost like 13% of the respondents that we have received till now. So this is about those who are in the age, but those who are covered. That picture also is, tells us quite a lot. And the left bottom table, we have the people, those who are under a category of 1 to 3 lakh, 3 to 5. So we see the number is quite significant when it comes to the self. So around 78% of our total alumni do cover themselves under either self-procured or employed or employer provided or some other forms of insurances. But when it comes to the combination of self plus a spouse and children, the percentage goes significantly down. And we can see here with the table as well. So this tells us that people might be covered under their employer, but again a policy that covers everyone in the family. So that is where the gap is, and I think that with this policy we should be able to cover some of the gaps. Now, Vishas, I think it's time for us to get into the technicalities of the product and the structure.
Hey, thanks, Shikhar, Subham. Thank you for setting the tone up. Good evening, everyone. Myself, Vishwanath. Uh, this is a subject very close to my heart, and as well as we have been working together to create something meaningful for this community. Our vision board is pretty much, clear in our thoughts. We want to create a kind of an affordable, inclusive, simple, and which runs for a long term as a product. As Sikha was telling you, some of the challenges which a lot of alumni groups have faced in the initial years, we would definitely like to do something which avoids us getting there. Uh, the coverage philosophy is again, we want to think big, we want to start small. Even if we want to have little bit of a cover being spread out to most of us, rather than big covers to few of us, we should pick the first one as a kind of concept. And we want to grow fast because we want to cover the remaining cohort, the passing out batches, and everybody into this. Not because we say it, because we have seen it with my 20 years of experience in this domain, and many of us seeing in and out. Such coverages really help people in the need when a lot of things fail. The design philosophy for the product is we want to have the whole family covered at optimal coverage level, which should be modular and choice based because nothing fits all. Uh, and then we want to have a predictable premium so that there is no surprises in the later years. The negotiation with the insurance companies will happen simultaneously and we'll get the best out of them. And we want to also have very transparent, understandable, easy to consume list of exclusions we know very well from the beginning, and again a very seamless claims process with the help of multiple stakeholders as the structure was showing, so that at any point in time we don't really have the kind of a feeling of a heat while we need something else to be managed during the hospitalization. So that's the idea. Can you move ahead? Yeah. So as we understood the conundrum that we have to swim together, else we will sink together. So as a community, we are thinking of like we have got our own workplaces insurance by the employers. Many times it fulfills a need. Many times it has got its own limitations, and that's where we wanted to have a kind of a community participation based, voluntary based program, which is also helping us to create a program for all of us together. And how will the anti-selection can affect is a kind of a point, sensitive point for all of us to understand how to uh, keep this floating for a longer duration. And then we have also to protect the category of people, like the people who are uninsured, the fresh batches. They have a campus insurance while they're studying, but the moment they are off the hook, they will be left either to the employer, or somebody will have to fend for themselves, buying insurance from their own pocket. So something will have to be done, because we have seen the fundraising for a lot of younger alumni in the initial years when they are not really pretty secured way of transportation, or they are actually in a kind of field situation which is exposing them to multiple risk. So we are starting, to think about them. Then we have underinsured and uninsured people from the cohort, which is a mid-age group who have been part of the job life for a long time, but still has not covered themselves. Either they were not, fully giving their, thought process to this part of the risk coverage, or somewhere something has got missed out. Then we have the parents part. Now, what has happened is in the initial discussions, uh, covering parents, old age, as we all understand, the premium of the insurance goes higher with the age groups, and then with the kind of a disease or the ailment that they suffer with, that requires a higher coverage amount. So we were thinking of how to cover them. Then we were also exploring the kind of the flavors of a base cover, top up cover, which has got a higher value, lower cost. So we are just balancing it out at this point in time, and I'm sure we will come up with a kind of a structure which satisfies most of us, our need or our demand. And then we are looking at how further years we can go ahead and keep on adding some of the things as we go along, because not we want to package everything on day one. It will be too heavy to start off with. So our idea is to do it from this financial year onward, or maybe at the earliest possible, since the new batch is going out. Uh, and people who are insured, when there is also a concern that at a certain point of time, the employer insurance goes away, you have to be again going back to some community level participation, maybe your friend group or some club or something like that. So why not a community of IFM group where you can always get yourself insured for little higher age group even after your employer insurance goes off. So can you move on? Yeah, so key coverages as we discussed about voluntary health insurance and cover the alumni, the family, and the kids. We have seen maximum participation for 2 kids. Some of them have 3 kids, and then mostly young people don't have kids. So whatever be the structure, we are trying to make it very custom design for people as per their need and the family structure that they have. Uh, we are trying to remove the waiting period or minimize it at the most, since it has got a direct bearing on the pricing. The higher the waiting period, lower is the cost, but we can't really go very high on that. We are trying to cut it down to an extent where people can feel the value coming out of it, and it's not really excluded to a longer duration. So that's where we are looking at. We are also looking at all the zero waiting period for accidental cases. That's where we got the trigger to get into this designing program of the insurance. Then we have base coverages depending upon how we want to pick it up. We can have a modular approach. You select as per your exposure. It's completely your preference. You want to get covered for higher amounts. Let the product have the ability to accommodate higher base cover demands as well. And we want to have the coverage of inpatient, a single private room ICU, which is standard for what we look for, cashless, where people don't have to really nudge or run from post to pillar. We want to also have the kind of small capping if there is something which is a high cost procedure, just to keep something in check, and also to continue to have a preferred or favorable premium levels being quoted to us year on year. And also we want to cover the new batch. Can we move ahead? Yeah, so mostly we have discussed about it. Less waiting period, covering everybody in the family. Top-up covers. We are looking at top-up covers at a very low cost for people who want a higher coverage, like parents group. That will be designed accordingly, and we'll be sharing back to this cohort very soon. Let's move on. Yeah, so this is the timeline. We are looking at 4 stages. Surveys almost at the level where we are having good number of participation. Then we're looking for a kind of an RFQ being floated with the broker and insurance companies. That's the next month. Possibly we will be starting that. And parallelly, we are collecting the data, some kind of analysis, some kind of premium payment procedures, tech platform participation. So onboarding of the entire players who are going to execute this program, and looking for the March end, probably, if all goes well. Very tentative, very high level assumptions. We are yet to actually sail in the sea and see what comes up as a challenge. But looking at closing this year with the policy going live, and starting the program very soon. So that's the structure. Yeah,
And
it's open for all of us.
And so I think, as Vishwanath was also explaining, we will look to, have a balanced solution, to be able to sustain this for the long haul. Have some clear norms, how we will operate. We're a community, not a marketplace. And we will evaluate features like copay, waiting periods, rejoin, if you're leaving the policy, what is the cool down period, caps within the policy. All of those we will be evaluating when we look at the solution that is being designed based on the feedback that we are receiving from the survey. But I do think, as I mentioned, if a number of premium institutions in India and others have been able to do it, I surely think, I'm sure we as a community, as an alumni body, can definitely do this for ourselves. With this open for questions, whatever we can answer today, we will do that. If we don't have answers, we will go back to the providers and get the answers for you. So, Shubham, we also received some questions from the batch champions already coming from the classmates. If you can bring up some of those questions, or if you can just say those for Vishwanath and Divyendu. Divyendu, please do come on the video as well. The team can answer those questions.
Sure.
I think while I present and bring that the document up, the first question and the majority is the clarity on those who already have an existing insurance policy. So Devendu and Vishwanath, I think the question is how that is going to be structured, or what exactly an alum is supposed to do in terms if they have an already existing policy and on top of which they take this policy as well. So how is that going to be pan out in terms when it comes to the claim?
So during the claim,
please take it up. Yeah,
Vishwanath.
No, please, Divindu, go ahead.
So what if I if the person, if anyone has got two policies, then what is the process of claiming from both of them, right? So the underlying assumption is that the first policy runs off because of a higher value of the claim. So the second policy needs to kick in, and if that is, let's say, the alumni policy, how that will kick in for people who already have a primary policy, right? So that's the question. So in that scenario, be it a cashless, be it a reimbursement, whatever is the procedure followed during the hospitalization, the alumni will be doing the claim from the first policy. In the during the first policy claim process, the discharge summary, the documentation received from the hospital as a docket, that gets submitted to the primary insurance company, and whatever amount gets settled, that is mentioned in the claim settlement letter provided by the first insurance company. Let's call it the primary insurance company. The original documents are submitted with the primary insurer, and with the help of the claim settlement letter, the second claim can be initiated with this our secondary policy, which is the alumni policy. And as we saw in the slides, there is a TPA. There's a TPA is a third-party administrator who is going to be present. It's a 24/7 sort of a support mechanism that we will be having on behalf of the alumni committee coverage, wherein the alumni will be hand-holded towards the claim process, be it from a secondary policy or primary policy.
Yeah, all right. So I think the next question is also somewhat related to this. How does a top-up policy gets differentiated by the base policy? Let's assume that someone already has a base policy with either their employer or it might be self-procured, right? So what exactly there should be choices, or how should they go about the policies or the selection with the alumni association offer?
So see, a top-up policy is a secondary policy, right, in itself, right? It comes with there are two major values that one needs to consider. One is the sum insured, and so you can go up on the sum insured. It can be a very big policy, 50 lakh policy of a top-up policy, right? But there is also something called a deductible. right? So that deductible is something like 3 lakh, 5 lakh, whatever. Okay. So this particular deductible has to be paid by the insured of the top-up policy by his own means or by means of some other policy that he has as a like the primary policy or a base policy. Okay. So that is how it works. So if suppose someone already has a office or a company provided policy, which they can call a base policy, and the top-up policy can be taken on top of it. This top-up policies will be provided by the Alumni Association coverage. This will be having a deductible. That deductible you can choose basis the coverage that you already are having by yourself or by your company, provided by your company. And the process of claim remains the same. It's a two-step process, as I mentioned in the earlier query.
Right. Let me just read out the questions that has been posted by the champions, or from that we have collected from the group. So if a person is already has one insurance plan and then this plan is also subscribed, in the case of claim, it will be settled in some proportion. Or if one covers is exhausted, then the next cover will be applicable. I think it's somewhat, this is from Avinash 2000. I think it somewhat has been answered. If the base cover has been taken, right? So the base cover will take care of the the rest of the amount that need to be covered under it. And if not, then I think the top up also can take care of it.
Yeah,
Yeah,
so
but
just
the
to
base policy.
simplify, Subham, just to simplify this, one more round of answer to this. If you have one cover and you buy the second cover, so there are two set of TPAs when you get hospitalized. One is the TPA, which is based out of the hospital, who is a resident TPA, and the other TPA, which is from the patient side, like for people who have got hospitalized. So if you tell them there are two policies running on me or my family, they will, instead of coordinating with one insurance company, they will coordinate with two insurance companies. And they will also bring in the kind of amount to be paid for. So basically what happens, they go for an authorization, they seek for an amount approval by the insurance companies, and whatever coverage you have from policy one, policy two, they will secure, the kind of the coverages under those policies, and the sum total of that amount will help you decide whether that entire kind of cost of hospitalization has been paid off, or you still have certain things left out from your pocket to be paid off. Sometimes consumables are not covered and few things are there. So essentially the TPA of the hospital is one point contact for all your policies to get covered or communicate to the insurance companies from where they have been issued. Second point is from the top up point, as the Vidhu explained very nicely. Top up has got one basic criteria that something need to be deducted, that something can be defined as an amount of 1 lakh, 2 lakh, 5 lakh, whatever is the comfort level of the person who is buying the policy. Now this deductible amount is the first to go off. So for example, you have got paid off for 5 lakh rupees of coverage from the hospitalization cost, and you have had a top-up product which is talking about a deductible of 2 lakhs. So out of this 5 lakh, first 2 lakh is your out of pocket. Now this out of pocket can be from your own fund or from any other insurance policy. Doesn't matter to the top-up provider. He just want to ensure that the first level of the expenses is not taken care by them, because that's how the premium pricing is lower for the top-ups. Once the trigger happens for the remaining balance, then only these top-up policy comes into play. Else the base cover or your own pocket, whatever be the source of deductible, that is very much required for a top policy to be paid for. So that's the two answers for the question.
Thanks.
Nitish has raised his hand. I don't know, Nitish, if your question relates to what Vishwanath is talking about. Feel free to come up on the video.
Oh, yeah, hi. I hope I'm audible. I'm in the middle of market, but I can speak.
No,
Am I
no, go
audible?
on. Yes, yes. Go ahead.
Okay. So my question is, you know that each and every industry has different network of hospitals. So if I am having my first personal health care, and one hospital is under the network of first this insurance, and the insurance that we are opting from Alumni Association, and that doesn't cover that particular hospital under cashless. So how it will be settled? Like, I hope you are getting my question.
Devendu, your help.
Yeah, so I'll answer that, Nitish. See, hospitals. So one is that there is a network hospital. A network hospital is what you just referred to as a cashless hospital. So suppose there is an insurance company called ICICI Lombard, and then there is another insurance company called HDFC Argo. Okay, and there are, I think, another 20 odd such insurance companies. Each of them has onboarded their network of hospitals, to which, if the policy holder of that company goes, then he or she will be provided a cashless experience, right? But because of geography, India being such a large country, say the I've seen the largest number of hospitals being empaneled is approximately 13,000 by couple of insurance companies. But 13,000 is way lower than it's not even 30% of the total hospitals in India. So nobody has covered the entire hospital networks, right? So for the remaining hospitals, there is a clearly laid reimbursement process wherein you pay the hospital which is not in the network, in the cashless network. You pay for the procedure, and then you apply for the claim by means of a claim process, right? And the hospital gives you all the documentation that is required for the claim process to go through. So here you pay the money upfront to the hospital, and then a typical claim reimbursement process takes 15 to 20 days, and this is facilitated again by the TPA desk of the insurance company, right? What we also need to keep in mind that each and every insurance company in India publishes and regularly maintains a list of blacklisted hospitals, which is mentioned on the insurance company's website. So that we will be communicating to the alumni, whichsoever insurance company gets onboarded, what the list of blacklisted hospitals. Those are the hospitals which are notorious for doing wrong things from a claim settlement side. So we have to avoid those hospitals at any cost. Be it so those hospitals are not they are present in metros, they are present in non-metros. So typically, to answer your question, Nitish, don't worry about the hospital near to your home or which the doctor prescribes as being if it is not in the cashless network, it is a cash outflow of some 20 to 25 days that you will need to take care of, and then it will hit your bank accounts. I
So just a follow up to this. So why I asked this question, because last week I was admitted to Mass Hospital Delhi, and I'll let you know that I had nothing to do with PPA. So everything was managed cashlessly, and it was managed cashless and through hospital only. I did nothing from my end. But suppose if the insurance company that we are opting through Alumni Association, and that Max Hospital is not under this cashless, that means that I need to take care of all the expenses and I need to claim it after I'm discharged from the hospital through this reimbursement process, right?
Yes, and a little more to that. Yes, your understanding is absolutely correct. The insurance being a regulated industry in India, the regulator is IRDA, they have come out with something called cashless anywhere. So this they came out approximately a year back, right? Wherein they mandated that all insurance companies have to provide cashless experience across all hospitals in India. Okay, so the jurisdiction of this particular regulator, the IRDA, is upon its insurance companies, right? So insurance companies ko the IRDA said that you have to provide cashless experience to all customers, be it on panel, be the hospital on be it on network or non-network, right? But so here the problem is, I'll just deviate and take some more time. This could not be implemented in practicality because hospitals don't have a regulator. So suppose a Max or a Hinduja, they will say that, or a Lilavati, they will say that I don't agree to this cashless. So see, when a hospital empanels, sorry, when an insurance company empanels a hospital, they agree to a rack rate. That cataract का जो है 20,000 होगा, cancer का treatment का इतना होगा. So that rack rate gets agreed between the insurance company and the hospital, and hence whenever a customer of that insurance company lands onto that hospital, there is a pre-approved rate, right? So hence the entire transaction becomes cashless. But the bigger hospitals are notorious to not agree to the cashless rates, which are called GIPSA rates, CGHS rates. There are multiple rates. So, but to answer to your question is that if you are able to, if it's not an emergency situation, if it's a planned hospitalization and the hospital is not on the network, and if you are able to give a 7-day TAT, if you can give a 7-day window, then the TPA and the insurance company are obliged to provide a cashless experience with the hospital which is still not on their panel. For that particular treatment, so what you will need to do is that you say that for Max Hospital, I want to get admitted for ABC treatment, right? So uske liye jo hai 7 din ka aap usko window do, and they will negotiate the rate for that particular treatment and give you a cashless experience.
Thank
Nitish,
you. Thanks a lot.
Yeah, I think,
Yes.
yeah.
Okay.
Shubham, there are more questions in chat as well.
Yeah. I'm just jumping to the chat box here. Give me a second. So Manmeet, would you be able to help me here, because I was not keeping the track of the chat box? If there is any question which has not been answered by you, yeah, please.
Yes. I've just answered one or two of them. Let me go back. So Rana says that maybe we can consider reducing the waiting period or eliminate it altogether.
So Rana, we can, I'll just take this question. We can do that, and we can also put many other things, like we can have hospitalizations planned globally. John Hopkins we can definitely plan the hospitalization. That is also allowed. So the thing is that we mentioned that conundrum the people anti-selection will kick in because this is a voluntary sort of a policy. इसमें जो है ना claims जो करने के लिए जो alumni का है, so there is, let's say, some claims are there which they have not yet taken, but the moment the policy kicks in and there is no waiting period, no cappings, तो वो जो है ना initial जो burn होगा ना, that is going to be detrimental to the overall cause. What is the overall cause? We just mentioned that there is, I think the stats basis the alumni who have fed into the survey, approximately 17% are not insured. approximately 21% people were having a coverage less than 5 lakh rupees. So uninsured and underinsured. ठीक है ना? And let me assure you, 90% of our parents are uninsured. ठीक है ना? So, and who are, the first slide, so many cases where the alumni came together for pooling in funds, endowment fund. Those are the youngsters. है ना? They are definitely, they have not even thought about insurance. ठीक है ना? So we can, I think 1 year sort of a capping is what we are contemplating, and that is low. If you look at Policy Bazaar, just go to Policy Bazaar, none of the policies are having less than 3 years of waiting period. We are talking about 1 year of waiting period. Right? So we will keep it very balanced. उसको खराब नहीं करेंगे. See, we should not compare it with a corporate policy. क्योंकि corporate में there is 100% employees are to be covered. There is no chance of anti-selection कि मैं लूंगा क्योंकि मेरे को क्लेम करना है. वैसा नहीं है, सबको लेना है. तो 100 लोग पैसा भर रहे हैं, उसमें से 5 लोगों का क्लेम आना है. यहाँ पे जो है it's a voluntary participation. So hence a little bit of friction will in running this policy for miles. And we have seen during our interactions with multiple brokers and other alumni committees of all the so-called large institutions with a large base which has participated. क्योंकि जो लोग पहले they came up with a very lavish policy, वो जल गया. They had to calibrate it downwards बाद में to sustain the policy. हम लोग कह रहे हैं कि we will calibrate it upwards. एक बार पहले लोग आ जाएं. Let us rally to have at least 500 people participate in this policy, and trust me, we will run the policy. This IFM group will run the policy better than any other IIM or IIT with 500 people and not a very flamboyant policy.
Absolutely.
Thank you, Dibyendu. That's a very comprehensive answer. The next question is, what is the minimum or maximum number of alumni that is required to make this a feasible instrument?
500 will be a very good thing. वो क्या है कि उसमें जो ना claims आते रहेंगे. See, every claims will come. Claims will definitely come. There is no denying. Abhi, in the first slide, what we saw was some 21 lakhs for some, I think 5 or 7 claims or incidences. Here, if we run this policy, there will be many claims. And with 500 people participate, our base is now large enough. Many of us should participate in this policy, even though they have 20 lakh of coverage. एक छोटा सा coverage हमको लेना है. ठीक है ना? The reason being कि it will sustain the policy for a very long time and it will not cost much. The thing is that to answer the specific question, in India, approximately 15 alumni अगर मिल जाए तो policy लिख देंगे. 15 is the minimum, but I think with the kind of momentum the participation, we should be able to rally for 500 alums to participate.
I will also add, this morning I was exchanging messages with the IRMA alums involved in their policy. And something that they mentioned, and I should mention here, 10% of their alumni who are participating have committed to participate every year, along with the commitment that they will not use the policy because they don't need it, but they are going to do it to give back. 200 of their alumni have committed, if they fall short on premiums for renewals for their policy, the 200 people have committed that we will come in, we will step in. And I'm pretty sure we in our community have such alumni. We will be able to do this. We will be able to sustain this as well. Manmeet, you can continue.
Team, I am Praveen. Is this allowed to have a question here or just to put you in the chat?
No, please do ask. Please do ask.
Hi, hello everyone. First of all, appreciations to everyone. My name is Praveen. I am pass out of MRM 2003-2004 batch from there. Full name is Praveen Anand. And good listening, Dibyandu Nandi. I joined bit late, Dibyandu, but I noted that you mentioned 1 year lock-in period. Okay, so a claim cannot be put. I believe accidental claim will be allowed from the very first day as any
1 year,
policy. But
so I'll just interject here, Praveen sir. You can continue after that. Just for the benefit of the here, there is no lock-in, there is no waiting period for the general claims. Only for what is called in this terminology PED, pre-existing diseases. Okay, let me elaborate this. Pravinji, you can continue after that. So pre-existing diseases are chronic conditions. Let us say diabetes or hypertension, acute hypertension, right? Because which diseases which will not go away, hyperthyroidism, right? Diseases will never go away. For hospitalization events that are triggered due to a pre-existing condition, like let's say I have a high amount of diabetes, right, which is with me for whatever, let's say 5 years, or I know that I have a high diabetes, and I have taken, let's say, the policy today. Okay, and after, let's say, 1 year, there is a partial blindness that is triggered because of diabetes. ठीक है, अभी जो है, I have already declared that I have diabetes when I'm taking the policy. Okay, now here comes the pre-existing diseases के लिए अगर hospitalization हो रहा है, then we check whether we have met the waiting period criteria for PED. अभी अगर सोचो कि पॉलिसी में लिखा है 3 साल का पीईडी वेटिंग पीरियड है, तो 1 साल के अंदर अगर मेरे को डॉक्टर कहता है कि गेट अ हॉस्पिटलाइजेशन डन टू ट्रीट दिस बिकॉज ऑफ द अंडरलाइंग कंडीशन बीइंग पीईडी, तो जो है क्लेम जो है 3 साल की वेटिंग पीरियड में जो है नहीं कर पाएंगे. हम कह रहे हैं कि जो पीईडी कंडीशंस है, वी वांट, आई एम नॉट कमिटिंग, नोबडी इज कमिटिंग हियर, वी आर इन्वॉल्विंग द लार्जेस्ट ब्रोकर्स इन इंडिया to go through our requirements, and we are collecting those requirements by means of such conversations. Yes. कि जो है PED जो है हमको जो minimum रखना है. So yes. Also that कि अब सोचो कि मेरे को मलेरिया और डेंगू, my platelets fall like this thing, and my doctor says that immediately rush to hospital. So there is only a 30-day waiting period. For accidental cases, 0 waiting period. For all other diseases which are non-PED triggered, 30-day waiting period. Please, sir.
The Bandu, yeah, fine. I agree with that. I might slip in terminology here or there a little bit, but these are all general conditions of every policy. Accidental is covered from the very first day. Immediately, the person get a policy, and usually any other disease, usually there is a period of cooling period of 1 or 2 months. Okay, otherwise like you said, otherwise PED, usually any policy nowadays, if anyone go individually also, it's a 2-year period. Corporate, it is also covered from the very first day. 0. So I listened you saying it will be 1 year here, correct?
We will try. So we are just while we are in the discussions, we want to keep it lower than what a retail policy is, and higher than the corporate 0 waiting period.
Correct.
So
that's fine.
One is that beach wala.
Yeah, level. That's good. You can take a better call in that area. But whatever is possible, you reduce the period, maybe 6 months or so, because in this group, I believe most of the claims, because the senior people are already either in job somewhere or in business somewhere, they are already covered, they already have some coverage. Juniors do not have a coverage. Usually juniors will be using it, and for them PD will be less. It will be only accidental one. But for the seniors benefit, if you can reduce the PED from maybe a 6 month, that can be a genuine period. I'm not suggesting match it with the corporate, because with the corporate, and also do not think it different from the corporate, because in a nature, for the cash flow it is same, everyone will be paying the premium, and there is a group of 500. These are the two situations background in any corporate as well, but they do negotiate and they do cover PED from the very first day also. If you are successful to do it with a 6 month also, that will be a very good thing, a appreciable one. This is one clarification, if you can give me quickly, please. And pardon me if I joining late. If I have already missed, I don't want
Please,
to
sir,
repeat
please,
and
please.
consume.
It will help
Yeah.
everyone on the
Yeah.
group. Yes,
So
please.
I listened that here there is no limits and there is no sub limits also. But you said there is no limits. Are Is there sub limits also? Like a few days back, I already have a coverage, but when I went for a treatment for the eyes, then when I went for second time, it was for the eyes. There is a sub limit. So those sublimits. And also please clarify me if you are also keeping a co-payment here. I am suggesting let's keep little bit of a co-payment, because in any policy that reduce the chances of the misuse. Okay,
Yes.
because these new regulations falling on the insurance companies that they have to give the cashless experience to everyone. People go to XYZ hospital, they do a cozy relationship with the doctors and start misusing the policy.
Yes.
So keep some co-payment, say 10 or 20% co-payment. So what's your view on that? I just wanted to maybe
Praveen, if
update
I
myself on that.
can, Praveen, if I can step in here, because we are past the hour mark also, we want to cover other questions. We do take note of your comments. We will use all of these, things that are available: co-payments, capping of limits. There will be some waiting period as we are discussing. Rejoining after you leave the policy, a cool down period. So we will be looking at all those features. We are discussing them with the brokers. We are talking to other alumni associations, what their experience has been. We will be taking that into account for sure. If we can move forward with other questions, it will be helpful now. I'm just conscious of the time here.
Oh, please move forward. If other questions are differently and something golden, which is different than mine, please go forward.
No, not
And
at
sir,
all.
please send it also to us as a kind of a text message so that we can collate all these inputs.
Yes.
It will be really, really good for us to have insights.
Thank you. Manmeet, any other questions?
Yes, we have two more related to top up. I think it'll be good to address those. Abhay is asking, can we go for top up policy coverage over the base policy? Is there any provision for it instead of choosing higher base coverage?
Yeah, one should
There shall
always
be.
have a mix of base and top up.
Yeah.
See, in India, stats in India, average जो claim amount is approximately 1.25 lakhs. Okay, approximate, right? So top up policies have a minimum in India, deductible of 3 lakhs. So hence top ups are very rarely to be invoked in India. So they are very profitable policies for the insurance companies. Hence they keep the premium very low. So as prudent individuals, one should have a base policy of minimum 5 lakhs and a top-up policy of minimum 20 lakhs with a deductible of whatever amount is the base. That is in India, and one should have a mix of base and top-up.
All right, thank you. There's one by Vivek. 3 major concerns come up while discussing this topic in their WhatsApp group. 1, critical illness cover. 2, alumni from SAARC countries. And 3, parents coverage.
I remember Manmeet, the SAARC countries query. Okay? So institutions and government funded institutions in India are having a lot many participants, students coming in from SAARC countries. There is in IRDA, the regulatory body of India, a provision for geographical extension allowed for SAARC countries. So someone who is, let's say, a national of nationality is Nepal, right? He has studied in IFM. He is the alumni of IFM. Whether or not now he is maybe he's in Nepal, maybe he's working in India, but his nationality is not Indian, whether he can choose to be part of the policy or not. So that technically will require us to first understand which company's policy we are taking. Okay. So all policies, so different insurance companies are filing their policy document, the policy wordings with the IRDA. So it is not every insurance company's policy is a replica of each other. So every policy, insurance company's policy has their own policy wordings. So in the policy wording of the company that we finally onboard, we will have to see whether they have written a geographic extension for these SARC countries or not. So because we have a healthy, even in my batch, there were people from Nepal. So keeping that in mind, we will go with this will be one of our criteria to go with the insurer who is allowing geographical extension in his policy.
All right, that's a good preference. Yes.
Yes.
The second question I think that has come across repeatedly is also about covering critical illness. So we have been asking people whether they would like to have such a feature, and I think depending upon the responses received, we'll be discussing it with the brokers or the insurance companies. So basically, depending on the number of people showing that kind of interest. Yeah.
Right.
Would you like to
If
make
I
any
may
last comments on
just,
the parents coverage? Yes.
sorry, if I just put a point over here regarding that critical illness, because what we see in last few these claims or what the funds we collected for students, these are basically those who are critically injured or having some critical issues. Because of that, we have to do this fundraising. So if we can add this critical coverage, certainly it is going to help the students specifically, and those like who are exhausting their amount because say 5 lakh 10 lakhs and they are having some critical issues that can be covered here. So that is something which is to be think upon in a
Yes,
serious
yes,
way.
it's a part of the plan.
Thank you.
Anyways, we are working on that. Yes, yes.
Thanks yeah. Thank you. Bye.
All right, I'll take one last question from Varsha. What she has learned from others with individual and group coverage is that for smaller claims, they opt for a claim under the group policy. Otherwise, they go for the primary policy. Is that practice? Is that a good practice or bad?
Go for the primary policy first, individual policy. Okay, na? Go for the group policy later. See, individual policy goes. So it is India as a whole. They have priced. Okay, na? It will not, your next year premium will not get affected by your claims. But in the group policy, it is the premium for next year will be basis the claim experience for that year. So to keep the group premium for subsequent years in control, claim in your personal policy first. It has a larger group of India. So if you have a Lombard policy, let's say Lombard Elevate policy, so Lombard Elevate users across India, that is much larger than this group or any other group policy. So always claim on your personal policy first. Then this is the second line of defense for you. Right.
Okay. Manit, have we finished the questions?
We have Rishi with his elaborate comment and a sweet
I
request.
saw the
Is it
comment.
allowed to take that up?
Rishi, the team will, speak to you. But why don't you come up on the video and say a few words? You're a part of the community here, and your contributions we're all aware. So why don't you come up on the video and say a few words? Do we have you, Rishi? Okay, probably not. I think Rishi is talking about covering all the younger batches, and some of the alumni committing, to support that. Grateful for that comment, and grateful to people who are thinking like that. We will take that into account as much as we can. Ravi, anything to add from your side before we close off?
Not really. See, one of the things that we definitely would want to also consider is that we have lost a few people from our various batches, the alumni. So, as part of the group insurance, we would want to explore continuous coverage for the family even after the passing away of the alumni, if that were to ever happen. And just imagine the kind of peace of mind that each person would have, that their family is covered if something should happen to them. I do not know if that's
Absolutely.
possible, but that's something that we would all like to explore as well.
Definitely.
Definitely will explore, sir.
Manmeet, unless there are any urgent or any questions that you think deserve attention right now, I'm just conscious we've gone way past our time. I can close off. No? Okay.
Yes, please.
So I will just close off. Let me unmute the Bendu here. I will just close off saying, we've seen instances where, we've come together as a community. We have raised lakhs at a short notice. Kalol is here, and very recently he led, in 48 hours, we had 9 lakhs raised by this community for a student in IFM who was not covered at that point. And tonight, we're not just talking, about, that's the spirit of IFM. And we're not talking about transforming that spirit at all. We are just talking about a system that protects each one of us in moments of crisis and every single day, after this policy is put into place. This is about our dignity, our security, and our solidarity. So I would request over the next few weeks, as we work through this, please stay engaged. Fill out that survey form if you haven't. Nudge your batchmates and classmates if you have, because the participation does not just help you, it helps the entire pool. It makes the program more viable, more affordable, and future-proof for everyone. So thank you for giving your time, your trust, your energy, and making, and helping us build something that is meaningful for all of us. And we are only just starting here. This is going to be, quite a long road. So please stay with us, and please keep engaging. Thank you so much.